All right, guys, let's talk about the long-term vision of the market here. This is going to be a fun one. As we get into this, I'm going to explain to you guys everything that I'm about to talk about and try to pre-predict is strictly technical and price-based, okay? Everything's technical-based. So obviously we don't know economically what's going to happen tomorrow, but I can kind of foresee what we're looking at, where the market will expect to be. When I look at the 12-month chart, the yearly chart is amazing for this. If you first have to understand markets and candles the way that I do, so I'm going to kind of just straight up break it down for you. Here you go. Pay attention to this. I use a 2-candle rule. All right, so 2 candles. When I see 2 candles with major volume is the biggest thing. So I'm just going to use an example here. Let's say that we have a candle setup that's like this, and excuse my drawing here. Oh, I don't know what happened to this guy. Why can't we put one there? There we go. First candle like this, of course it's going to open here. You're going to get some sort of wick fill, and you're going to get another candle with some meat to it. All right, so 2 candles like this heading in the same direction. Let's say on a higher time frame, any time frame chart, doesn't matter. 2 candles heading in a similar direction with more volume than the previous move based on the chart that you're looking at. Doesn't matter time, doesn't matter the time frame, whatever time frame you're looking at. 2 full volume moves. All right, is what I'm always going to expect 90% of the time is for this entire thing to fill. All right. How is it going to fill? Well, we're going to open a candle, right? From this candle, we're going to open a new one. We may push lower. So you may end up with a wick way down here, okay? But at the end of the day, as soon as we cross back above here, this is where I'm starting to looking to buy. Or realistically, I'm really trying to buy even here. When you understand what you're looking at, you can do that. But this is the safe play. And then from here, this candle should do something of the sort. It may even sit down here and do one of these guys. Well, it'll let me draw. It may pull one of these where it does one of these even, but ultimately it will make its way back up. It may not happen fast, it may take a while, but it is going to happen. All right. And this is kind of the nature of how it would actually happen as well. And it'll eventually get to where it fills the whole thing. Okay, and you will notice this across multiple different markets everywhere. This happens everywhere, over and over again. Again, does not matter the time frame. You'll be looking at a 5-minute, and as long as you've got 2 with more volume than the previous, this up here, I'm just going to use an example. This could have just been chop at one point, and then it rolled into this. Okay, so just give an example here. Now, let's go look at the real charts now that you understand what I typically look for. 2 major voluminous candles, huge. All right, NASDAQ, let's go talk about it, and let's put this stuff into action. When we look at this, obviously, we're looking at a yearly chart, 12-month. So as you can see here, we got some consolidation, and then we go ahead and pop on and up and out. And is what's interesting to me on this run up and out. One thing economically, I've been saying that we, at some point, one of these days, may see COVID lows again, but I'm going to explain where. I'm going to show you. When I'm looking at this, this is that consolidation point, and here is the move up and out. Here's the clean move up and out. Now, what's happening right now? It is currently the 28th of June 28th, so we're almost into July, or something like that. Anyways, we should see price at some point this year, or yeah, realistically, I'm thinking this year, we should see price back into this tradable range. And this right here is the current tradable range. As you can see, we are way extended outside of it. But let's go down to a daily for a second and look at this. And how interesting enough, when we see price, obviously that's its high point. Look at that move up and out. I mean, just absolutely incredible. Freaking nuts. Nuts. And even here, just to give you an example, what I'm looking at is currently, these are my two clean candles that I'm paying attention to right now. This is the active tradable range for NASDAQ at the moment. But at some point we should end up back down here around 27, no problem. But let's look at some other markets like gold. And again, let's head to the yearly. Gold's on its ass, and people, well, it's getting there, and people are wondering, well, it's down 30% this year. What the heck? Let's look at a 12-month. Let's pull the data out. What do we see here? We see a whole leg brief of consolidation, all in here. All of that is consolidated, whatever. Then what do we see? Two nice bullish candles up and out. This is, I mean, monstrous. So this is the active current tradable range for gold, and yet we are still way up here. Obviously, you can see price did its thing and pushed way beyond, but it is no surprise. Price goes up here, flies up to 5,000, right? Flies up to 5,000 and then says, nah, not today. I'm good. Comes back into the tradable range. And I want you guys to pay attention right here. All right, so this is going to be, I'm going to put a little price level on it. That's the high point of that tradable range. Let's go look at what the daily's doing here. And you can see how price struggles all here. Here, struggles, breaks out nicely, tests it nicely, goes on. Test, comes into it, and then falls below. Tries to push bullish pressure back above it. Not once does it get back up there, and eventually just rolls on over. And so now we are back into the tradable range. Of course, it's possible for gold to trade higher up into 4,500 again another time, but ultimately, I think the bias remains short. I think it is, trading is that simple. You have to have a very, very strong higher time frame bias, and I'll tell you, I have not been buying gold once on any of this push down. And I'm sure a lot of people have been buying. Obviously, you can see that in the price action. People are struggling to hang on to their buy positions, and they're just getting waxed lower and lower and lower. And realistically, I think gold has a long way to go lower. I think we're just getting into the meat of it. That's gold, that's NASDAQ. And then the only other market that I really trade is going to be pound yen. And we're going to go to a yearly on pound yen. Let's see what we're looking at here, right? And this is interesting to me on pound yen. This is clean volume, yearly volume. And we can see last year we opened up above here and we've stayed up above it the whole time. And realistically, when you look at this tradable range, where is pound yen's potential? Pound yen's potential is not found. This thing is not done going bullish until we see this little area come into play around 220. So it's that easy, guys. It's simple. And to go back to this here, I'm going to make a new scenario. This is a 2 candles down. If we were to fill these, can I fill these somehow? No. Well, these are bearish candles lower, right? 2 bearish candles means I'm looking for a buy scenario. So this is a BUY scenario. Now a selling scenario is going to be simple. It's just the opposite. It's going to be a candle up. Let's see if we can get that in there. 1 candle there. Then we need another one. So we need 2 voluminous candles, right? And if I see this, I'm going to trade it as this is my tradable range. As soon as I see 2 voluminous candles come out, then that's my new tradable range. Now, what's important about this, what I want to show you guys, is you'll have to understand the midpoint of the tradable range is also going to act as some sort of support and resistance. And this is what's going to tell you whether you are fully going in the direction that you're positive of or not. So for example, let me just give this here. So what I would do in this scenario, again, I'm looking for, if I've got 2 bullish candles in a row, I'm looking for a selling scenario, right? So let's say for whatever reason we do get into a sell up here. Boom, we hit the button and we throw stops and we make it. All right, cool. Well, now is what you're going to find is this is now everything for whether this is going to continue up against you or not. The reality is sure you sold here, is what can happen is you trade into this, and then next thing you know, price pulls its way back up, and boom, next thing you know, now it's creating a bullish signal on you. This is not something that you want to see. But if I was to get rid of that, take our sell scenario there, and we trade down, and we go down, 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 down. Maybe it wicked higher at some point. Let's just say it did, because this is going to be the open. There we go. And so if we trade down lower into this now, is what's happening. Okay, we're here, right? Well, it may just push down on and through. So maybe your candle ends up looking like this. Let me redraw this here. It's going to look like this. You're going to have your wick up here. Cool. Boom. You're going to open. Again, you're going to have your wick. And this is what you want to see. Does not matter how far it goes from here, is all you want to see to validate that you are in fact going this direction is a close below the midpoint. Now you know your sell position up here where you entered is protected. You can pretty much throw a stop loss here now at break even. Jesus, if I can even draw an E. So that's now break even at that point. This market may pull one of these where it tests up here, and then at that point it will in fact sink and go lower and lower and lower. So that's kind of a breakdown of how I like to read candles. That is a perfect example of how I like to read candles. And yeah, I mean, it's pretty simple and straightforward. I do believe that's why these higher time frame biases that I've given here are still in fact accurate. If you guys have any other markets, let's just go check EURUSD on the yearly for kicks. Let's see what we're looking at. And so when I look here on the yearly, I see a couple things. So here is the major yearly volume points for EURUSD. And then you can obviously see how this area right here is holding up, which is the midpoint of this downside move. So the overall bias here on EURUSD is clearly going to be bullish. Obviously, you can see we have supported this, in fact, low for years now. All right, we've stayed stable. And one thing I want you guys to notice here is that we're getting multiple confirmations over and over, and we're not seeing them the opposite way. So as you can see here, we have two clean years lower. That indicates that the next year should in fact be higher. That was the case. Obviously we reject from there, but again, we're getting 2 bearish candles lower. So the next 2 years, 2 more bearish candles lower. Okay, cool. And then even further, all I'm saying is we're not seeing the opposite. Now, if I started seeing a bullish candle here, and then let's say another, which it's not going to happen there. Let's just say this bullish candle here, and then we had another bullish candle to follow back in 24. So 2023 was bullish reaction. 24 was another bearish reaction. If the 24th would have been a bullish reaction, I would have been weary of continuing my long basis here. All right, but regardless, I know EURUSD is still long, 100%. And the day that we ever get above $1.20, it's game on. So hopefully you guys can understand a little bit of how I like to view these markets. Get yourself an overall bias and direction in the market. It'll help you a heck of a lot more. It will completely remove the confusion whenever you get into the lower time frames. And you know what? While we're at it, let's just, for fun, let's go through. Let's go through. We're looking at a daily now. So let me give you an example of, this is a great example of some potentially bullish volume about to come into play. So you can see we have 1, 2, 3 days stalled out in this price area, and then we have 2 consecutive clean bearish candles lower. That's 1 and 2. Cool, let's talk about it. Now you can see price gets back up into this range, and today is our first open back in this range. So I think, just for example here, this would be a long scenario. I'm not taking a trade, I'm just giving scenarios. This could be any long scenario. You could put stops right below that volume, or the range itself, which is only going to be about 20 pips. And all day, you should have no problem returning a 80 pip move here to the back to the upside. And that's just baseline. Realistically, and let me explain this too while we're here. This is how I would look at this midpoint. You got this 1, 2 lower, bam, there's your midpoint. So any reaction off of this 14,200 level is going to tell me exactly what's going to happen further. But for the time being, this is your way to get in and keep your edge short. You have to understand this. You can do this on lower time frames, 5 minutes, 15 minutes. It's all the same. It really is. It's all the same. Let's go look at NASDAQ real quick. Let's go to the lower time frames. I'm going to show you guys what I'm looking at. Obviously, we've already talked about it going lower. We go to the 4 hour. Nothing. I'm not seeing anything of confidence in there. Let's go to the day. And this is an interesting take right here on NASDAQ. Obviously, I know we're bearish and we're sitting here. And I'm seeing something, right? This is where it can be confusing. You have 2 nice legs lower, right? You would think you need to go higher. That's fine. That's great. That's dandy and all. But at the end of the day, this is going to be the highest point of your midpoint within that 2 candle move. And what you guys are noticing here is that actually we're just consolidated. So you can't consider these 2 pushes lower, even though they are big volume days. Compared to the rest of the structure, is all I'm seeing here is that we're consolidated. And is what I mean is this candle would have had to push a lot lower for me to consider, like down into here, for me to have been like, oh yeah, there's the move I'm looking for. And then I'd be looking for a buy back up. But obviously, I'm not looking to buy at all right now. And on top of that, so that goes against my bias. But on top of that, it's simple rules. This is not 2 clear days of volume movement. Okay? This here, this is something to pay attention to. So even though we're consolidated here, like I said, I'm expecting this to go lower. Basically, all I'm going to do is pay mad attention to this and this. And I do think we're going to end up down here next. That's simple as that. That's our next target. So, again, guys, you got to understand candlesticks. You have to understand candlesticks. It has nothing to do with ORB or some volume or some just anything else. It is candlesticks. You must understand how to read price in order to have an edge. And let's see what's happening right now for kicks. Actually a 4 hour. Let's go look at a 4. Yeah. Anyways, this pretty much wraps it up. We'll get to NASDAQ later in the week. But yeah, guys, if you have any questions, feel free to let me know. I'll be happy to help. This should be a great breakdown of how to start viewing markets better. You don't want to be looking for clutter. You don't want to be looking for any crap. You want to be looking for the same thing over and over and it be systematic. And realistically, hands down, one of the best ways to do that is what I've found here with the 2 candle rule. It's very simple and straightforward. that being said, we go and cut it off.